The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, welcome on here to the Diagnostic Trading Hour. Well, let's check out what we got right now. We got the S&P is down about 1 point on the day. We got the Nasdaq down almost 14 points on the day. The Russell's up 0.6, and the Dow is down 0.15. Gold's currently up just a couple dollars on the day. Silver is up pretty small, just 0.36%. So not a big move for silver. We've seen some huge moves recently. Copper, metal is actually moving quite a bit, so it's down over 1% on the day. We got oil down 53 cents, about 0.5% move. We got natural gas is down over 3%. So not a big surprise. A lot of times we do see that over on natural gas. Looking on at corn. Corn's currently down about 7 points. We got soybeans up 5. Euro dollar is up 14, with pound dollar up 6. Aussie dollar is currently down 10 pips on the day. Euro yen is down 8 pips. US yen is down 11. Pound yen is down 4. We got the dollar CAD up 29 pips. And so dollar showing strength there against the CAD. And we got the dollar franc down 27. Overall, we got a mixed bag basically overall on the dollar. So it's not necessarily overall stronger or weaker on all of the currency pairs. Okay, so and it's looking pretty balanced out right now. Checking out the markets, going through that. One of the things we want to do is always do a market recap. I talk about the news and different ways to trade that. So we want to pull up a simple chart on the news reports that I brought up to you earlier in the week. And the main one, of course, we had a couple things happen this morning. So it's a good time to go through and do that recap. And let me pull up the news reports. We had 2 reports that came out this morning, and let's check out what happened on those reports. So I'm going to grab the 5 minutes, and I'm going to change this up a little bit to where the chart ought to post over there. If you're on TFNN, you ought to see it here in just a second. So there we go. All right, and so it ought to be showing soon if it's not showing already. Let's see. Okay, now I can see it. All right, so now that's pulling over there, and we can see the euro dollar. There you go. I want to get that centered for you, and I'll just load a template up here. There we go. And so we had the news, and we have euro dollar. We also had pound dollar. So maybe we'll start off actually with pound dollar. So right over here on the pound, and we had our interest rates come out this morning on the pound, and we had the pound straddle and strangle. So basically there's different ways that you can trade it. Expecting a pretty decent move off of the report when it comes out, and the report usually comes out right around 7 a.m. As you can see, a whole lot of volatility spikes just because all that volume happening right when the news report comes out. So what we want to do is we want to measure. See if I can get my little measurement tool. It wasn't working earlier. There we go. Good. All right. So what we want to do is we want to measure from right before that report to the low. There really wasn't a low. So, the low was that point. And then to the high. As you can see, we got about 48 pips. So a smaller move than normal on, the pound interest rate. And one of the things I always warn people was like, hey, be aware that when the pound interest rate comes out, you ought to be looking for a pretty quick move. If you're not getting a pretty quick move on it, the trade's probably done. Let it go. Move on, because your ECB press rate and conference is going to come out, and that press conference is the big trade that you're focused on. So on that trade, when you saw there wasn't a big move, you should have been able to get out of that trade for approximately a break even on that trade on the pound dollar. It would have taken a while. It would have been closer to like 8.30, but you still should have been able to get out of that trade. So, even if you're choosing, unless you're choosing the 8 a.m.s, which, I always tell people, hey, you can choose 8, but you probably want to look at later expirations just so you have more time when you do the trade. So you have 8, but again, you don't have a lot of time. If you would have chosen the 11 o'clocks or the 3 o'clocks, you should have had no problem exiting break even on that trade. Now, if we look over again at the euro, so we know what that one was. We'll go over and look at the euro. And on the euro dollar, right here, we had their stuff come out. They had their minimum bid rate that was released at 7.45, and they left it as expected. So not really any big change, and that's one of the things I talk about is don't expect a big move off of the press rate conference itself. But then the big move is, not at the press conference. Don't expect a big move off the bid rate. Expect the big move to happen off of the press conference. The only time we really get a big move off the bid rate is if they change it, they surprise everybody. On the ECB press conference here, what we see is that came out at 8:30. And so we can see the market really started moving. And so what we want to do is we want to measure from that point, because that's where you should have been looking to get in the trade, somewhere, before that news announcement. And the market ran down. We got about 82 pips on the trade. And how does that measure up with our stats on the press conference? So you got a break even on the pound dollar, but on the press conference we're looking for about 76. And so you should be able to get a nice solid trade there, whether it be a strangle or a straddle. It worked out really well. It actually did it really fast. So you got it by before 9 o'clock. So if you would have had the 9 o'clocks or the 10 o'clocks or the 11 o'clocks, all 3 of those worked out well. I even try to get the 3 o'clocks sometimes if I can. It depends on how much they cost. But so great trade right there, right off the euro dollar, and early in the morning. So, but not so early, not so like some of these like 3 and 4 and 5 and 6 a.m. ones. So normal trader, normal hours, you can easily have taken advantage of that trade. And I love that press conference trade. It moves. It's probably even in some ways better than the pound one. Because unless the pound changes, we don't get a big move on it. But if it does change, it explodes. But if you can get break even on one and you can make money on the other, then all the better, right? Now, let's see here. The next thing, okay, to look at would be what's coming up, tomorrow would be our main thing. Now, we did have a few other things. We had our unemployment claims this morning at 8:15. Had a little bit of an impact on the market. Not a major impact. We also have the CAD building permits, something I don't expect usually to have a massive market move. It can. But those building permits can affect copper. So remember I said copper, big numbers today. So those building permits do help actually move copper right there. And the building permits were down. They were expected to be negative 2.3, and they were down at negative 6.7. So always be aware. Anytime you got any kind of housing, or building permit in Canada or U.S., that can be a big copper mover day right there. So you can always check and see, are there any good-looking straddles or strangles that you might want to hop in and take advantage of. Now, that we have all those pieces in place, let's talk about, if there's anything else tonight, we don't got it. We got natural gas, and then we're going to hop into tomorrow, the fun stuff. Okay, so last thing, we'll go look at natural gas with the inventory report come out. Might as well cover that one. This is a really hard one to try to straddle or strangle because there's already so much implied volatility built into natural gas because it moves so often. It's not like something that goes from low to high. It's pretty much always high, and can even be even higher whenever the report comes out. We did get a decent amount of movement off of it. So first moved on up there. And 0.047, and then we got a massive move down. It's just been heading straight down, and down 138 right there from the high to the low. So it may have worked out well for you completely depending upon what expiration you chose. That could have been a possible trade for you. Just remember, it's a tough report, and it's not so much the report itself; it's just the instrument. Like I said, it's the binaries, the spreads are by nature more expensive because it is expected that you'll have larger moves. But that sort of wraps up the current day. Lets you see the movement on it. And then as far as those inventory reports there over on natural gas, the storage, down 147. The action number came in down 157. So that's why you got that initial pop right off the market. So when that initial pop happened, then you go, okay, well, that means it should go up, right? Because natural gas storage is down. And it did, a little bit. And after that, the market didn't care. We got a bunch of volume spikes, okay? Bunch of volatility, implied not volume spikes, but volume spikes. So we got a bunch of volume spikes, 10 and 15, same time. Market turned around and got a short signal. It's been moving on down ever since. And if you were trading this and you did get in right there on that signal, then you'd be looking to move down, your strikes, and right as we get like right below the deviation level here, goes down, comes back, at or above, closes down again, then it goes down again, and now you'd have your stop right about just above the high of this one, right here, high of 4.093. So it's 5 ticks above 4.093 on natural gas, and I'd be looking right now. I'm actually looking for a potential trade. We got, let's see, volume spike, and then 1, 2, 3. So if this one, nope, we had 3 bars after. So we actually didn't have a volatility spike entry, but it easily could pull back up after solid 1.5 deviation down move on the day. So big move. But I like to have that 3 bars after the spike it happens on be the bar I enter on. If that didn't happen, then just not my trade. All right, let's get into, like I said, the fun stuff for tomorrow. Tomorrow, you have a few things to be aware of. You got the Frank CPI that's coming out at 3:15. So if you are trading at that time of day, not usually a major impact report on the Frank, but either way, you need to be aware of it. You got the pound manufacturing coming out at 4:30. May have 10 to 30 pip impact on the pound unless it's just massively off, but more often than not really one to straddle or strangle. But we got the NFP unemployment. We also have the the CAD employment information we can trade. So first thing is we'll just go look at the CAD first. And over here on the dollar CAD, you'll be pulling it up, getting all your information ready. And then what you're going to do is you're going to pull up the scanner to help you find these trades easily. And you can try to do it, without it, but you're really just going to be guessing because there's too much information to process fast enough on your own. And so to be able to process all the spreads and to know, not guess, but know that you have the best, straddle or strangle, you're going to want to hop in and use the scanner. What are the expectations? Well, the dollar CAD, when these reports come out, okay, which are basically the employment change forecast and the unemployment rate for Canada, which, by the way, come out at the exact same time as the dollar, so it adds to the volatility. It's usually about 80 pips. And so you'll just hop on here, and let's say you're looking for spreads. If you're going to do a straddle, reset your filters, all right? Then go in and say, okay, I want $100 risk. I want a 1-to-1 risk-reward. And make sure that whatever time it's coming out, that, if it's coming out, say, in 30 minutes, make sure you go in and make this 40 minutes or whatever. Just because you don't want to see the trades that are going to be expiring before the news announcement comes out. And then we'll go down here, we'll choose dollar CAD, and we'll see if we can find the best potential trade setup. And I just want to walk you through the steps so you know what to do in the morning to make this trade. Okay? There, we'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, come on back here to the Diagnostic Trading Hour. So what we're going to do is we're going to check out the dollar CAD. And we're going to look at it real quick to see any potential straddle. So if it were, 8 o'clock in the morning, before the news comes out, because all the news is going to be released here at 8:30, okay, in the morning. We got the unemployment change, the employment change for Canada. We have the non-farm employment change and the unemployment rate here in the U.S. All 4 released simultaneously. Then, how could we find one? So you hop on, it's 8 a.m., this is what you see. And you got to make heads or tails of it. And so what you're going to have to do is find ones that are close as possible. Let's see, so it looks like that one right there has the closest floor. And so it's helpful if you actually highlight over these because you can sort of find the one you're looking for maybe. And so I know that my sell is going to be, one of these two. See, that was a little closer. If I look at it, see how this one's further, like deep in the money, it's not going to work for a straddle. I click on that one, same issue. I click on that one, and get about the same thing. So, get the exact same thing. That's why you can't tell the difference. This is actually a great example for you of if you can, and this will happen. I mean, I'll even see this happen before news. You'll see that you have the same, proximity to underlying. Basically, it's 14 ticks away from the underlying, which if you have 80 pip expected move, you don't care, okay? you'll see that you have a max risk of $3, a max risk over here $3, max profit 95, max profit at 95. It's the exact same spread, except this one expires in 33 minutes and this one expires in 93 minutes. So hands down, if you're choosing between these two spreads, there's no reason to choose that one, simply because you'd be giving up an hour of time to be right and you'd be getting nothing for it. Okay? So definitely make sure that you are paying attention when you're looking at, the straddles and stuff like that to find out, hey, is there a better one? Because that literally could be the difference, okay? That could be the difference on here between, you winning and you losing on the trade, because maybe it takes 45 minutes to get where you want it to go. It doesn't happen in just 30 minutes. And so you end up losing on this trade, not because of your direction of your trade, but because you chose the wrong strike, because you didn't even notice that there was another spread that was the exact same. You had like every benefit, plus it gave you 60 minutes without even charging another $1 more. So, that's fantastic. So we get rid of that one. We go up here. Okay, now we got to line it up. So check out these two. Notice, they're also the exact same. Now, this one is $1 more. Okay? So you have one tick more to break even, $1 more, basically $1 less max profit. We don't expect it to move 80 pips anyway, so we don't care that there's an 80 pip max profit. Same width, 32 minutes, 92 minutes. So now you just got to ask yourself, is it worth $1? Okay? Is it worth $1 for me to get another 60 minutes of time to allow my trade to move? In my case, definitely yes. It'd be worth a few dollars. Now, I would have got some of these where it's like $5 or $3 for, I go in at like 8 o'clock, and I have literally got these on NFP day for, $3 to maybe $5 more, and I've got the 3 o'clocks instead of the 10 a.m.s. So I got 5 more hours, $1 an hour. That's, like, if you can get that, like, all day long. Because remember, we expect an 80 pip move. And so how do you know if this is a good trade? Do you know you want to straddle? You know you expect it to move 80 pips. But how do you know it's a good trade for you still? Well, what you're going to do is you're going to have to look at the risk on the trade versus the expected move. And this is probably one of the biggest pieces that people mess up on when they try to pull off doing these news trades. And they'll go in and they'll go, okay, I know I expect it to move 80 pips, but they don't think about how far it would have to move for me to make the profit that I want to make. So in this case, I'd basically be risking, $13 plus $3, risking about $16 to do the trade. Okay, that's my total risk on the trade. I want to make 80. I don't necessarily want to make 80. I want to make a 1-to-1, by the way. That's also another big thing. You can go for the big money. You can go for the average move. If you want to, you're going for the doubles and triples and, sometimes the home runs. A lot of times I'm just going for 1-to-1. That's it. Okay? So in my opinion, I'm like, I need to make $16. My probability of making $16 on an average 80 pip move, pretty high. Okay? So if you want to go conservative, this would be the, there's one more level of conservative, but it's riskier. So I'd say this is a balanced conservative method. And all you got to do is add up the total risk plus the risk on the other side. So $16 plus 3 is 19. And so when I buy this at 108.63, I add the risk on the other side, and then I say sell it 19 ticks higher than 108.63. Come back, I'll talk about the short side.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
All right, folks, we'll come back here to the Diagnostic Trading Hour. And so, now, we talked about straddles before, but now we're talking about how to know should you do this straddle. And, well, if I only got to put up $16 risk, now obviously it's going to cost more than this tomorrow, I can guarantee you that. But $16 risk, and I have to move 19 ticks above where I have to buy. Okay, now we're about 3 ticks away from break even on that trade. Okay, so that basically means that it's going to have to move 21. When I say 3 ticks away from break even, I mean that the dollar CAD's pretty much like at 1.0863. We can actually open the ticket and see the current indicative here. Yeah, 1.0863. So that's why that's what that number means right there when we say proximity. We're saying how far is the buy price on the spread from now we're actually looking at the underlying, not simply the indicative, but how far is it from it? And so you'll see that it'll match, within a few ticks, I think 3 ticks away, 6.9, 6.6. So it's 3 ticks away from the underlying market. So if I understand that, I understand that's where I'd have to put it on at. I mean, this one's moved quite a bit, so just moved it up a couple bucks. But then I understand I have to move it 19 ticks above the high where the market's actually trading. Well, 19 ticks above the where the market's trading, if I expect 80 pips, that's not a problem at all. Okay? So on the other side, I'd have to go, okay, well, what do I expect on this side? Okay? Now what I got to do is I go, well, I have, we'll just use the original numbers. I have a $16 risk, and I had a $13 risk on the other side of the trade. So I'll go, okay, so I need to also make those $13. So I need to make 29 pips. And to do that, I'm going to need to be able to buy this back 1.0847. I need to buy back 29 pips lower. So I could say 1.0847 minus 0.0029. I'm going to be able to buy it back at 0.0818. So now I got to go, okay, well, what does that mean as far as how far it actually has to move from the underlying for me to make money? Well, if the underlying is quoting at 1.0866, has to move down to 1.0818. I need about a 48 pip move in the underlying on the downside. I only need a 19 pip move in the underlying on the upside. That's because it's already in the money. So usually you won't have it where it's that slanted one way or the other, because you'll be able to get in one right around 8 o'clock that's lined up. But understanding that 48 pips down, 19 pips up, or let's just say it was balanced. It was 30 pips down, 30 pips up. That's within my 80 pip expected ratio. Not only is it within my 80 pip expected ratio, but it's even, what if it only moved up 40 and down 40? I'd still make my money, okay? I could actually hit profit on both sides. So, by understanding that, you know if it's too expensive or cheap enough. And you really want to know, is it too expensive or cheap enough for you to hit your profit target? So always look at what's the expected range, what's the price at, do I expect it to get there, and then plot those levels on your chart. This is how far I think it needs to move, and then you can go in and you could literally pull all this stuff up on a dollar CAD chart. And so if we did that right now and put all this information in, you could literally go, okay, well, what is, you got this whole thing. You go, all right, I need about 80 pips up where the market is right now. And that's, pretty high. So go over here, let's drag this till we get to 80. So there's 80 pips above the market, and I can grab that and I just mark that level. Okay, that's how far I expect it to potentially move. Okay, and then I need 80 pips below the market potential, or not need, but I expect, say, 80 pips below the market. So I do the same thing, and I grab it, and I go, okay, so we'll go down here, and then we just adjust that a little bit. So that's really the farthest I expect the market to move in either direction. Okay, so one of these two levels. I really don't expect, it may move more than that, may move less than that, but I don't expect it to move any more than that. So what I then do is go, okay, well, what are the price levels that I'd be taking my profit at? So 1.0818 was one of them. So I go 1.0818. Okay, so on my sell side, I'd be taking profit. Sell there, and I take profit right here, which is above really the furthest I expect it to move. On the buy side, so if I was buying, and we said it only had to be like 16 pips above where we were buying, and that was like 19 from where the market was. So 1.0, let's see, 66, or 1.0, yeah. Like 667 right now, plus 0.0019, so 0.01, or 1.0686. So 1.0686, go over here, plot that level out, and now I'm going to have these take profits in there. I'm not going to be like sitting around, okay? I'm going to, and like waiting to get there. So I'll have them right in there. So on the buy one, I'd be selling right there. Both of these are within a range that is less than my expected move. Therefore, I can use that to my advantage and know, hey, that's good. Because what I have seen, okay, what I saw in the last, not the FOMC, minutes that were released, but the last statement, is I saw a trade where literally my take profit was on the opposite side. To get 1-to-1, literally it was like up here, okay, and down here, which means I expect the market to only go to this price level and then reverse. But what it was telling me was if I was going to get out and make a 1-to-1, I'd have to sell it up here like twice the expected move. Here, twice the expected move to make that 1-to-1. Well, that tells me that is, one, not a good trade to straddle. So, because it's going to cost me more, and the chances of me making 1-to-1 are very slim because I don't even expect it to move that far. So if I don't expect it to move that far, why in the world would I put on a trade where I'd have to move that far in order for me to make my profit? And if that's the case, if it's big enough, then I'm going to look at it and go, well, what would happen if I did the reverse? Because I'm like, well, if I expect it to stay in this range and the pricing that they're giving me is basically at these levels, and it moves down to this and pops back up a little bit, I can actually make money just doing a reverse straddle, iron condor, whatever you want to call it. So there's a lot of ways to do these, but if you're just focusing on the straddles or the strangles, just make sure that you understand what price the market has to move to for you to be able to hit your objective. Otherwise, you're going to pay too much and wonder why you're always losing. You're like, oh man, these spreads suck. This new thing doesn't work. Da 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 da. You're picking ones that are too expensive, and it's your job to know whether or not they are. And the scanner is what helps you do that. Okay. Now you could also go over and you could look at strangles. So we're looking at 3 PMs. We could look at strangles and go, okay, what would the 960 cost? Let's see, is there even one that's that far out? There's not even an even one that is that far out right now. So you could do the 1.0892 for $6, and because the market doesn't expect the market to move that far right now, so that's why they're not even there. And then basically down to like 1.0792, we can do the 1.0812 for 96. Now, here's a lesson for you. It's very simple, but even if you expect it to go all the way down to 1.08, there's no reason to do the 1.0812 because again, $96, $96, $96. Okay, this one's $94. So in all these right here, I might even choose to risk a couple more bucks and do the $94 one. So I got $6 risk here, $6 risk here. I have a $12 risk. That's about the same as the binary one, but it's a lot closer. So that's the case where you may go in and go, I'll do the strangle over the straddle, or I'll do both and see how it works out. The only issue on the strangles is if it doesn't move far enough to hit your strike, you lose everything. On the straddles, if it just finishes above or below the very middle, the very center. So right here, if we have a straddle on and it just finishes anywhere above or below the center, we get some money back. Okay? So if I go in there and I buy up here and I sell down here, I know there's a lot of lines starting to pop up on the chart. But let's see here. Make this a little more easy to understand. If I hop in and I sell this one right there. Okay, so I sold it for this price. This is where the market is. And then I go in here and I buy this one right here. We'll make that one green to make it easier to see. Any green will work. There we go. Then, if it finishes above this, I'm going to be break even or better. Okay? If it finishes below it, but if it finishes anywhere in here, I'm going to get some of my money back. All right? Whereas the binaries, even though they may be like right here and right here, so they're closer than our 1-to-1 that we currently have, it has to hit my profit target for me to make money. Now, there are two ways to look at that profit target, and this is totally like twisting around everything. One is actually hitting the target of the strike. That would be a little more aggressive method, okay? So where it has to hit the strike. If you want to be even more conservative and increase your probability over on your strangles, then what you could do is just go for, again, what we talked about all along is a 1-to-1, okay? So it wouldn't necessarily have to move as far for you to make that money. And a helpful tool I have here is a simulator. And you can go in and say, okay, if the market were to move 20 pips on the USD CAD, then what would the contract be worth? Okay? Well, this contract, if it moved, say, 20 pips up, would be worth $72.50. Okay? Now that would be a full, basically that'd be hitting the strike, and even then some. So let's even lower it more. Let's take it down to like, just say, 10 pips. what would it be worth? If I bought it for $6.50, there we go. I could sell it for $25. Okay. Over here, if I sold this one for $94, I could buy it back for $79.50. I'd make $15. Well, what's my total risk on the trade? My total risk is $12. So if it moves up, just because of where the binaries are priced right now, I could actually make a 1-to-1. If I'm risking about $12, I'd make $19 on the trade. I'd net a $19 profit. On this side, I'd lose $6 on this side. I'd make $13. So pretty close to a 1-to-1 on the $12 right there. Actually a little better. On the downside, I'd make $15, but I'd lose $7, so I'd make about $8. So that trade may not make the profit right at that just 10-tick level, but I can take it to 15 ticks, and this is pretty cool. If you start playing with this, you'll really start to see that there's a massive value in the simulator, especially like before news. I go 15 ticks now. Now I got something. So 15 ticks, when I can buy this thing for $7.50 and I can get out of it $54.50. This one I can sell for $94 and get out at $59. I can make $35. I can make $53. I'm way past my 1-to-1, and I don't necessarily have to wait for it to get all the way to the strike for me to take profit. And so that's a little more conservative method. You make it a 1-to-1 or better, and I mean you can play with it if you're just trying to get like what's the closest I can get and get that 1-to-1, because that's really what I do is I want a 1-to-1 and I want the closest strike I can get. And it sounds funny wanting to limit yourself to 1-to-1. But what you're really trying to do is limit yourself to the ability to have the highest probability trade. So even the smallest possible movement could turn into a profit for you. So I look at this trade. I'm like, all right, well, let's see, 41. Well, if I'm risking 13, basically got to make, if I'm listing 12, I got to make 12 plus the 6 on the other side. So I got to make 18. Well, this says I'm going to make 34. That's way more than I need. This one says I'm going to make 28. That's more than I need. And you literally just go to, it's like, well, let's scale it down even further. Let's drop it down to 12 ticks. And see, can I make 18 on both sides? So I can still make 18 on both sides with that. What can I make? What about less? And this may be where if you're going, well, if I'm just going for 1-to-1, I may want to go for the higher probability trade, and that's where I might want to do the binary. Now I'm pushing right there. I'm at $19. Okay? So now I'm at 16. So see, that's going to be right on the line. So I'm going to take it back up. We're going to do 12 ticks. All I need to make a 1-to-1 on this trade would be a 12-tick move. So a much faster move. Now, if I don't get my 12-tick move, I lose all $12. Okay? So that's where you're going back and forth. But you can put up potentially less risk, if not the same, but possibly less risk, and less movement. You could accomplish the 1-to-1. The only downside being if it doesn't make that movement fast enough, then you will lose it all. So not lose your account, but lose the amount of money your maximum risk you put in the trade. Whereas, like I said, the spreads you won't lose. So the maximum amount of risk you put in the trade. Okay, so that covers the dollar CAD. Before we finish off here, I want to make sure I do get into the other numbers for you, so you have those. And let me pull them up. And get your pen and paper out. Be ready here. Okay. So we got the NFP coming out at 8:30. And we know that they recently did their whole quantitative easing thing. That's going to have a little more impact on. I would expect to have a little more impact on this because people are going to be watching it to see are they going to accelerate or decelerate quantitative easing based on the new unemployment numbers. So they'll be making their own projections on that. So what are our stats? Well, our stats over the last couple years here, we got the euro dollar over 100% of the time moving 50 pips. Okay? We had the euro and the euro yen. So both on that, 50 pips, and we get about a 100 pip move. Okay? On the dollar franc, pound dollar, pound yen, over 85% of the time, nearly 90% of the time, we're breaking 50 pips. And we actually did that within the first few minutes. Then the average move over the course of a couple hours is over 100 ticks. So on all three of those. So very, very big movers. Aussie dollar, dollar yen, about a little over 80%. They're breaking 50 pips, and the average move is about 60. And dollar yen is actually a little bit less. It's only about 70% of the time there that it breaks 50. and it has an 80 pip high to low range. So obviously your higher probability ones are euro dollar, euro yen, dollar franc, pound dollar, pound yen, Aussie dollar. So just remember that the euro dollar, euro yen, dollar franc, pound dollar, pound yen, all of those have about 100 pip average move. That's the main thing you need to know. And the euro dollar just really moves a lot.
The key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we're going back here to the Diagnostic Trading Hour. So, again, I just want to go over those numbers for you one more time so you can jot them on down there. What are the expected ranges on the major currencies here for the announcement coming up? Euro dollar, euro yen. We're looking at euro dollar, euro yen, dollar franc, pound dollar, dollar yen. Sorry, pound dollar, pound yen. So, euro dollar, euro yen, dollar franc, pound dollar, pound yen. Those 5 currencies, on average, move over 100 pips after the unemployment rate that comes out tomorrow morning. Okay? The best one of those being the euro dollar, dollar yen. Over 100% of the time moves 50 pips at least. The Aussie dollar, Aussie yen only moves about 60 pips. But, you know, hey, if you can get a good risk reward on it, that's fine. All right? And then the US yen, on average, moves about 80 pips. And but only 67% of the time does it break 50. So you may decide that that might not be the one you want to do simply because it doesn't have as high of a probability of being impacted by the news. And what's really important about these average ranges, and I just want to reiterate that, is one, what is your expected profit target? Therefore, is your risk acceptable? Okay? So again, what's your expected profit target? Therefore, is your risk acceptable? Is it going to move far enough on that average range for you to at least get that 1-to-1? And if not, either one, you're going to do the opposite trade if it's way too high. Like, let's say it cost $100 to do the spread. Well, then I'm going to go and I'm going to buy the lower one and sell the upper one. I'm going to do the exact opposite. The other option is to go over and check out the binaries and see if there's one with an acceptable profit target where you can pull out that 1-to-1. And so you could start sort of like what I did earlier. You could go in, you could literally do simulate a range. You could type in, like 1.0 there for, dollar yen or whatever you're trading. And it would show you how much you could expect to make. And you can start narrowing it down because really what you're wanting is that 1-to-1. And you can even go in here and say, I want a minimum simulation of 1-to-1. And it won't show you anything that's less than that. Then you go down to you have like less and less and less, but you can go, okay, what about 0.5? And then you apply that. Click OK. And then you go in and it's like, well, okay, well, that's obviously quite enough. What about 0.25? And you apply that. Nothing shows up. So you literally can just go through here piece by piece and just keep adding in different ones till you get the ones that will work out for what it is that you're looking for. And you're really going to go as small as you can. So 0.2, 0.1. And what I'm looking for is I want these 1-to-1 or betters, okay? These are much money. Some of these are like 31-to-1, okay? I want these 1-to-1 or better trades that have the smallest move requirement to get it. And so whichever one that is, then fantastic. Because now it's only showing me 1-to-1 or betters on the simulator. And now I can just keep, bumping this thing down until I go, what is the cheapest one to pull this off? 0.05. Well, it's only 5 ticks. Can I still pull off a 1-to-1? On 2 of these, you could. If it moved up or down 5 ticks right now, 3 of these, you could go in, you could risk $3, you could risk $3 there, and you can make more than 100% return. You can make a 2,200% return, and you can make a 600% return on each one if it just moved up or down 5 ticks. So, it's pretty sweet. Play with it, and the more you play with the simulator to help you with the news, the better you will get at putting each one of these pieces together. So step 1, know your range. Step 2, check your spreads. See if the risk allows you to have a 1-to-1 profit target within the range. Step 3, if not, look at reversing it. Step 4, also check out how cheap you can put on some binaries within that range and get a 1-to-1, the closest ones you can get. All right, y'all have a great day, and I will see you Monday.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.